All right, so the cost of borrowing money has just increased. The Reserve Bank governor announcing a 50 basis point hike in the repo rate. That's up now to 8.25%. That is the rate that the Reserve Bank lends to commercial banks. In turn, that means the rate we get charged at our banks now goes up to 11.75%. But, says Lesetja Kganyago, this short-term pain of increased loan repayments is for a medium to long-term gain. It will ultimately rein in the rate of inflation, which, while it's seen a small downward adjustment to 6.8% this week, remains just too high. Food inflation still around 14%, a particular worry. Let's discuss this now with Frank Blackmore, lead economist with KPMG. Thank you so much for joining us. When is all this short-term pain going to end, and when is the medium to long-term gain actually going to kick in?
Well, I think the pain is going to be around a little bit. We're approaching that upper limit of the interest rate cycle at this point. And if we remember, one of the main causes of the inflation that the globe is feeling at this point has been the war in the Ukraine, which started end of February. So your biggest increases in prices started in March, April, May. And as a result, we've seen a decrease since that time of petrol prices and globally of food prices. And as a result, we see this decrease in inflation beginning with the read that we got earlier this week to 6.8. And I think we can expect further decreases throughout the rest of this year. The governor himself said it will be sometime in the third quarter where we will breach the upper limit of the inflationary target. In other words, inflation will read less than 6% sometime in the third quarter, but still, on average for the year, is expected to be around 6.2%, which is obviously way higher than the 4.5% target set by the Reserve Bank.
Who do we blame? I mean, is it external factors such as the war in Ukraine, or do we have to look closer to home and say this is what load shedding is doing, this is what happens when the US ambassador to South Africa blames our country and accuses us of selling weapons to Russia?
Yeah, so it's obviously going to be a combination of the two. The underlying inflation that we're seeing globally is obviously a result of external factors, most specifically the invasion of the Ukraine, and the results thereof on both fuel and food prices. But locally, our situation hasn't helped. We've had what the governor has called idiosyncratic risks. In other words, the load shedding means that we've had to go out and spend more money on generating our own energy, preserving the cold chain if you're part of the food supply network. And most businesses have had to spend more money than perhaps they would have, and trying to pass a bit of that cost on through the goods and services they sell to us, and thereby increasing the inflationary impact on the consumer.
The rand, let's talk about that, because it was already low after the accusation from the US ambassador, has recovered a tiny bit, but this afternoon hitting, I think, record lows against the US dollar. How's it trading currently, and do you expect this to become the new normal, or are you hoping for a bit of a bounce back?
Yes, we have seen a weaker rand. We're expecting, as long as there's uncertainty around what actually happened on the Lady R, there will be a lot of uncertainty around regarding these sort of trade partnerships with the rest of the world, and in particular with the US. I think there are a number of factors that the governor also highlighted as increasing what we call the risk premium. In other words, South Africa, when compared to other investment countries, we'd have to pay a little bit more premium to investors into South Africa in order to compensate them for the extra risks. And many of those risks are things like, due to our low growth that we expect this year, 0.3% is the updated value, you're not going to get a lot of tax revenues coming through. There's not a lot of profitable companies. There's not a lot of growth in the economy. So that's one thing. So lower tax revenue means that we'll have to borrow money from elsewhere to cover some of our expenditures. Secondly, increase in, the public sector wage negotiations didn't go as planned. Initially, they were limited to around 3.5%, increased to around 7% plus. That hasn't helped. And of course, there's always the financial risks of the state-owned enterprises, which we only find out at budget day or mini-budget day, how much has been given to these SOEs. None of those type of things assist. And then if there are political events such as the Lady R, that creates more uncertainty in the markets as well. And the result thereof is obviously a depreciation in the rand. As those events clear up and become more, the facts become known, we could see a reversion, because we know at this level the rand is definitely oversold.
If this uncertainty continues, are we in for more interest rate hikes? What is your sense? Have we reached the top of the cycle?
Look, it is possible, but that probability is getting smaller. We've seen a reduction, as you've mentioned, in the April inflation, and I think we're going to see further reductions in May and June, where June, July, we possibly move under that 6% level, and that'll give the minister, it will allow him to hold rates constant or consistent, and then perhaps even towards the end of year, bring those rates down slightly, depending on how well we've progressed as far as the inflationary decline is concerned.
All right, thank you very much. Not very encouraging news, but I guess that's the way it goes. Thank you very much, Frank Blackmore, lead economist with KPMG. And of course,